Global share markets rose once again overnight. Despite the tighter banking regulations proposed by the Basel Committee over the weekend, banking shares actually rose. The reason for this was the lenient timeframes that have been proposed by the committee. Banks have been given 8 years to get their capital in order, which is much longer than many had anticipated. Allied Irish also rose overnight after they announced that they'd sold their 70% stake in a Polish bank to Banco Santander from Spain. Of course, Allied Irish have received extensive government money and are working through a restructuring plan at the moment. A strong round of economic data coming out of China has given the Kiwi dollar a real boost on Monday trading. Chinese industrial production increased by close on 14% in the 12 months to August of this year, while retail sales were up over 18%. This all happened with relatively low increases in consumer prices. The good economic data has given both the Australian and the Kiwi dollars a real boost, with the Kiwi dollar gaining about 70 basis points to now trade at 73.3. It is likely to see some headwinds if we were to make gains closer to the 74-cent mark against the US dollar. The New Zealand Treasury have also announced a paper outlining their economic thoughts on the impact of the Canterbury earthquake. They assume that we will see a slowdown in economic growth in the third quarter of this year, but see a good boost later on in 2010. New Zealand lamb schedule prices have seen increases again over the past week. The low point in supply for the season has seen meat companies increase their prices, particularly for those on local trade. It is interesting to note that over the past week or two, lamb schedules are now beginning to near levels seen this time in the season from last year. The international meat situation is still looking pretty good, although the currency is not. The Kiwi has made gains against the European currencies and is trading over 57 against the euro and over 47.6 against the pound. This will put a cap on prices back here in New Zealand, meaning that increases in schedules are only likely to see marginal, if any, increases on last year levels.